What's up you guys, and welcome back to the Crude Crypto YouTube channel. In this video I'm gonna talk about the most recent pullback and how my bull buy indicator predicted this move, and I will also elaborate what I think will come next, and I will answer the question if we are still in a bull market. If you're already excited for the video, please leave a like and a subscribe, because I'm a really small channel. These actions are really impactful for me, so please do. When we take a look at the weekly time frame, we can see the bull buy indicator, which is the 20-week moving average overextension. We can see these extreme values on the bull buy indicator, which also form a downsloping trend. When the bull buy indicator value touches this white line, we can historically see that the price dips, or that this moment is the end of the bull market. As you can see, we have these 5 touches on the white line, on the white downsloping resistance line, and we also have 5 dips, which are corresponding to these moments in time. And as you can see, this last weekly candle, we touched exactly the white line before retracing that 20%. The main question is now, what will happen next? If we compare the previous run to the current run, we can see there are a lot of similarities between these types of price action. At first we had a major run up, then a stark correction, a big bounce, or even first a small bounce and then a bigger bounce, and then a prolonged correction, which could count as just a one big consolidation phase. If we take a look at the current run, we can see those same similarities. First a strong run, then a small bounce, possibly even a further bounce, and which then could also play out in a more prolonged correction, or even a starker correction. If we take a look at the percentages we've decreased at the previous correction, we can see that we at first corrected around 26 to 28%, and at the current run we corrected around 23%. If we measure the complete correction, we corrected around 30% max, which could also be an indication that we have more downside to come and correct around 30%, which is also confluent with the previous top. Corrections commonly play out as a ABC correction pattern, which looks a bit like this, with one leg down, a bounce back up, and another leg down. And therefore I cannot rule out that we will go down lower once more. It is possible that we still find support around this area, around the $48,000 level. For more common retrace targets, we take a look at the Fibonacci retracement. To find out which are the most common retrace targets, we open up a lower time frame and we perform a Fibonacci retracement from the swing low to the swing high. I took this point as reference because this point is the last time price touched the 20-week moving average, which is the bull market support line. I also explained this in my first video I uploaded to the channel. I will show you a pop-up right now. When we zoom in a little bit more, we can see that the most common retrace targets are the 0.382, the 0.5 and the 0.618, inclusive with the golden pocket Fibonacci line. I don't use these levels as exact price targets. Most of the time I look at price, and as you can see, this was the previous top we saw, which could lead which could act as support in the future. Therefore, this is an important range to watch for longs, possibly, and which I also really like is this range, where the previous wicks were. So these two ranges are, in my opinion, really interesting to buy back more. This is from the traditional TA standard, really nice time to buy. And also, of course, the 0.5 fib line, which has acted as a strong support and resistance during this consolidation phase. If we would currently correct around 30%, we can see that this is confluent with the top of the previous run. This shows that we have a bit more room to go down, have another leg down, but this also means that this could act as strong support, and that this correction is enough for the bull market to sustain itself. You guys need to know that corrections are healthy in a bull market. Nothing can go up exponentially non-stop. There are corrections needed to shake out the weekends and to let new capital flow in, which drives price further. The problem with going straight up is that you don't develop any lines of support, because as you can see in the previous correction, we have consolidated, and therefore we have found and developed a new area of support. Let's step up the time frame and go one time frame higher. When we look back at when we again compare the two corrections, we can see that in the previous cycle we corrected to the 50 daily moving average where we found support. And if we take a look at the current correction, we can see that the 50-day moving average is also again confluent with the top of the previous run and also confluent with the 0.382 Fibonacci level. And therefore, I think that price can find good support when price reaches these levels. When we open up the weekly chart, we can see that the 20-week moving average, which I already said is the bull market support band. We can see that the 20-week moving average is confluent with the 0.618 Fibonacci level. Since the 20-week moving average and the 0.618 Fibonacci line are two indications of strong support, I currently don't see price closing below this range of price. And you have to keep in mind that the 20-week moving average is also increasing over time. We have to state that the 20-week moving average is only a strong support when we are in a bull trend. And therefore my next question is, are we really still in a bull trend? Is this the end of the bull market? Are we going to see only lower prices from here? Is this the end of the big run? To answer this question, I'd like to look at some data science models which give more insight into this question. At first, I'd like to take a step back and take a look at all the data of Bitcoin. As you can see, Bitcoin moves in these kind of waves or cycles where we touch the upper band of this log growth curve and then touch the bottom in the bear market. And we see these cycles repeat over and over again. And currently we are again reaching for the upper band, which is currently around 100,000 US dollars. In previous cycles, we were going up to the upper band and we all saw corrections. This is completely healthy in a bull market. And when we touch the upper band of the block growth curve, we entered a bear market, which then again touched the lower band of this growth curve. This has repeated and happened for the past 12 years. And therefore, historically, it would be logical that Bitcoin also reaches these 100,000 US dollars price target eventually, or the upper band of this curve. Of course, we have to take in mind that previous price action is not a guarantee for future price action. And therefore, we have to look at multiple data science models to look if they complement each other and therefore give the same opinion, which then makes this opinion much stronger. By the way, shout out to Cole Garner and Quantadelic for making this chart. For the second model, I'd like to look at the Puell Multiple, which is made by David Puell. And as you can see, historically, the Puell Multiple has indicated the tops and bottoms of market cycles. Here again, we saw in 2017 that the Puell Multiple ratio was in the red zone, and therefore it indicated a market top. Again, and also the bottoms were predicted by this model. And this model shows, in simple words, this model shows how much revenue the miners are taking. And therefore, if miners make too much revenue, they would sell their Bitcoin and therefore price would go lower. And when the miners are not making enough money, like in these areas, they have to stop mining, which then decreases the supply of Bitcoin. And therefore, price has to go up when we see equal demand. Currently, we are not in the red zone of the Puell Multiple, and therefore this could indicate that we currently are not at the cycle top. And therefore the bull market is still present according to this model. If we take a look at all the previous Puell Multiple tops, we can see that there's also a decreasing trend in the Puell Multiple value for indicating a top. And therefore it's almost a decreasing trend. And therefore I would guess that if we would see a top, it would be most likely in this area if the Puell Multiple top would also follow this trend. The third model I'd like to show you is also made by David Puell, but also made by Murat Madov, if I pronounce that correctly. This model works very similar to the Puell Multiple model. This model is used to indicate market tops and indicate market bottoms. Again, as we saw with the Puell Multiple, we still aren't in this red zone or these extremely overextended values for when the cycle has ended. The MVRV Z-Score shows the difference between the realized cap and the market cap. The realized cap is calculated by looking at every individual coin and looking at which time or price they were moved. Therefore, when the current market cap is much higher than the realized cap, it could mean that the market is overbought or overextended. The same applies for if the market cap is much below the realized cap, which therefore could indicate a market bottom or oversold conditions. And at last, I'd like to look at 3 beautiful charts made by Philip Swift. This is the 1-year HODL Wave. This model shows the total percentage of the complete Bitcoin supply which hasn't moved in 1 year. We can see in these accumulative periods that the HODL wave stays around 60% if we take a look at the previous cycle. When this value increases a lot, this means that people are not really moving their Bitcoin, or they are bored at trading Bitcoin. These are of course interesting times to buy Bitcoin when no one is watching or when no one is interested anymore. When price comes up, we can see that people are interested again in Bitcoin and therefore start moving or selling their Bitcoin again. Therefore, this is an indication that too much Bitcoin is being moved or too much new people are coming in, and therefore the market is propped up or a bubble is formed which has to pop. We can also see that in the previous cycle we saw a more smooth curve, and in this cycle we are seeing a more choppy structure which indicates that there's much more volatility going on this cycle compared to the previous cycle. Currently 56% of the complete Bitcoin supply hasn't moved in 1 year. This is pretty comparable with the previous percentage of when Bitcoin wasn't oversold at all. I personally will believe that the bottom percentage would increase over time because Bitcoin are lost and therefore they can't be moved. Looking at this chart, I think we have much more room to grow if only 56% of the Bitcoin has moved, and therefore we could see more price action, more volatility before the new bear market starts, and therefore we could still be in a bull market. Philip Swift also made the RHODL ratio, and this ratio compares the short-term HODL coins compared to the long-term HODL coins times the market age. Here we can see that when these values are extremely high, this is an indication of market peaks, and when these values are very low in this green zone, these are indications that price is oversold. Currently we still aren't seeing values of previous cycles, and therefore this also shows again that we have more room to grow and that Bitcoin eventually can reach much higher prices. At last, I'd like to take a look at the P-cycle top indicator, also from Philip Swift. And this indicator uses 2 moving averages, the 350 moving average times 2 and the 111 moving average. When these moving averages cross, this indicates a market top. And as we can see, we almost crossed these 2 lines at September the 6th, but then the price dropped, which led to this yellow line to decrease in acceleration. This is because this is a lower moving average and therefore is more sensitive to price action. If we take a look at the current price, we can see that the yellow and green line are again closing in on each other, but we haven't seen a cross yet, and therefore we still haven't seen an indication that a market top has formed. When we correct or consolidate even longer, this yellow line would again decrease its acceleration, and therefore a future cross of these moving averages could be seen at much higher prices. Well, that's everything I wanted to say today, guys. I hope you enjoyed this video very much and that you learned something today. If so, I would really love to see some subscribes and likes. Because I'm a really small channel, these likes and subscribes are very impactful to me, so please do.